Okay, good evening, everyone. Welcome, those of you who just joined us. We're about to begin this evening's class. Those who are not here will catch either the recording, because tonight's session is recorded, as usual. Okay? So you guys ready? Let me know if you're ready. Just give me a yes in the chat box, letting me know that you're ready for this evening's class. Wonderful, wonderful. I see Grace looks excited. I see Vernon's excited. I see Ken's excited. Wonderful, wonderful. So let's move over to our chart. Here you can see I have a chart up. It is the pound US dollar. If you guys would like, you can always select a pair of your choice and we'll work with it. Okay, so do you guys want us to work with the pound USD, or would you like us to work with something else? Just giving you a chance to submit your comments. You can use the chat box. Okay, so I see GU is fine, so great. We'll work with pound USD, okay? So here you can see I have the pound USD chart up. This evening, we'll be doing trend detection. How many of you know how to draw a trend line? Just let me know by giving me a T in the chat box. Just drop a T in the chat box, letting me know if you know how to draw a trend line. All right, I see a lot of T's coming in. That's wonderful, wonderful. Okay, great. All right, so basically all of you guys know how to draw a trend line. Okay, let's go. So over here, we are on the 1 hour candlestick chart. I am more of a day trader. I'm not so much of a swing trader. I prefer to day trade over swing trading. And so I look at my chart on the 1 hour time frame. Okay. So here you can see we're on the 1 hour time frame. And if we're to draw a basic trend line, it's going to be drawn from the low, connecting it to the next swing and extending it outwards. Okay, so let me just try to fix this a little bit. Good, so this would be a perfect trend line. As you can see, it's connecting from the swing low to the next higher low and being extended upward, right? This would be an uptrend. Now, our next trend line, usually we're taught to use a trend line in a parallel formation, meaning we would simply just take this trend line, draw another one, just so I can have two of them. Let's try to get as accurate as possible. All right, and the next one generally goes like this. So you connect it to the lower high. After our swing low, the lower high, and you basically just run it over the price action. So you use parallel lines in this situation. This is typically how trend lines are used, and they're used in this way to create channels. However, a channel is basically just another pattern, right? It's all it is just another pattern. All right. So the way in which I like to draw my trend lines is I don't like just using parallel lines. I would connect my swing lows and I would draw a fresh line from my swing high, connecting it to the next swing high. Okay, so my pattern would look more like this, and I would say that this is my trend. Okay, now inside of a trend, we have smaller trends. Now, smaller trends would be considered as maybe corrections, we call them. We may call them impulses and so on, impulse waves. So for example, to show you this information, with this being a, let's call this a major trend, and we can find that we have smaller trends inside here. Now, for those of you who are familiar with the 12-12 pattern, that is basically where we look to identify what pattern is being formed in the off session. So for example, the market opened up here around this area here. This is the highest point of the day. The market came down. This is the lowest point of the day. So since this is the lowest point of the day between 12 and 4 o'clock, well, before, I should say, 12 and 4 o'clock, we would look at this as our swing low. So if this is our swing low, we would connect our swing low to the next swing, which is right in this area, and project that one out to around 8 o'clock or so, right? And then we take our swing high. Let me just remove, I'll leave this one, I'll use a different color. And we take our swing high and we connect it over the next swing. Let me just change the color of this. Let's use yellow. Right, and I'll draw in the bottom in yellow as well. Okay, so this is basically what our pattern would look like. And this is a pattern inside of a pattern. So this pattern, I would still refer to this as a trend. And why would I refer to it as a trend? Simply because we have price trending inside of the pattern formation. It's moving up and down inside of the pattern formation. So I would look at this and I would consider that this pattern is indeed moving in a trend, right? Some of us may look at it and say that it's moving in a sideways trend. Some of us may look at it and we may say that it's moving in a flag formation, right? How many of you are familiar with the flag formation? Just give me an F in the chat box if you're familiar with the flag formation. Wonderful. See the F is coming, the F's coming in. Good. So I would have been able to use the 12-12 method, which I have taught before, as I said, and you may find that class in the vault, right? So I would use the 12-12 method and create this formation right here. Now, this formation, being that it's a flag formation, it tells me that I would have a great possibility of a burst of volatility. Why? Because these patterns normally come with big volatility, right? So here you can see that around 2 a.m. when the market opened, you can see that the price went to the upside aggressively. It also went back to the downside aggressively, then bounced back to the upside. So around this area, it was a bit volatile, but it kept bouncing inside of this pattern formation. So if you understand how to create your trends, you will also understand that when you're trading, you can look at these trend lines to help you identify if you're going to stay inside of the trend. A lot of us are looking for the breakouts because many of us are breakout traders. We're looking for price to break out of the trend because we expect when price breaks out of the trend, we're going to get a very strong move, okay? Though that's not always the case. We need to understand what where we are in the market, what type of pattern you're looking at, okay? What wave are you in? So that will help to identify if you should expect a breakout or if you should not expect a breakout with high volatility, okay? All right, so here, as I said, we have what I would look at as a flag or a wedge. I would call this a contracting pattern formation. And I love contracting pattern formations because contracting pattern formations bring a lot of volatility. We get some big moves in the market whenever we find them, okay? In some cases, it could be a situation where it is kind of caught up in a bigger pattern formation and it has not been able to break out. So that is also something that you would need to look out for, okay? So this would be a major trend. I would look at this and call this a major trend or a higher degree trend. And this one in yellow, I would look at that and call that a lower degree trend. And now we are moving sideways over here. I would look at that. All right, just connecting the highs, right? It looks like this to me. All right, so it looks like that. And if I'm using the 12-12 method, as you can see, the market opened over here and the price is all the way up here. At the time that the price came here, the time was around, say 11, 12 o'clock. So this is 12 o'clock right here. And as you can see, after 12, the market pushed down a little bit and it just started to go sideways, right? So I would plot the first trend line from the highest point, the swing high in this case. Since we have a high of the day, I would plot my trend line on the swing high, and my next trend line will be on the swing low, which is here, right? And I would extend this into the future like that, okay? And this gives me an idea of what my next potential trend could be. So my next potential trend could be what looks here like another triangle formation or diagonal formation or wedge type formation, pennant, whatever you'd like to look at it as, okay? So all I need to do now is just observe how the price moves in the off session. If it goes, hits this trend line, rejects off it, hits this bottom trend line, rejects off it, then that would make for a good trade opportunity come 2 a.m. Eastern Standard. Okay, so I just watch and see how this one develops and decide if I'm going to get involved or not. Okay. All right, now here we are, we have another situation. As you can see, we have another trend. So let's adjust this. Okay, so we have another situation where we have a trend going on. Now, I've told you guys that I like using two ways of drawing my trend lines. I like drawing trend lines from wick to wick or from wick to body. Okay, and I've noticed that in some cases, the market makers do use trends from wick to body. Okay, so this could be what the trend line looks like. And since I like drawing my trend lines from the swing low or the swing high, so this is the swing low from here and I connect it to the next swing low. Okay. And as you can see, this basically showed me how price is moving. Price basically tries to stay, excuse me, price basically tries to stay inside of this pattern that we drew here, which is a trend. Okay, so the price basically tries to stay inside here until it breaks out. When it breaks out, it doesn't just explode and go in the opposite direction. It moves slowly, as you can see here, getting a bit aggressive around the market open, but it basically goes slowly, starts going sideways. Now, the way in which the price came down here, we would look at that and call that an impulse wave. Okay, and whenever you find an impulse wave, you should be expecting a corrective wave coming right after. Now, with us getting that impulse and getting this correction that we're looking at, that would explain why the impulsive wave is strong and the corrective wave is a bit more on the weak side. Okay, now the idea here is to try to avoid trading well, when I say in, I mean try to avoid trading inside of these types of patterns, right? Because these situations can prove to be very tricky. Okay, so it is better to wait for the market open, the European Open, the European lunchtime, or the US Open. These times are best for getting involved in the market. Okay, they're best for getting involved. They're also good for exiting the market. Okay, so these are times that you need to pay attention to as well. You can always go back, as I said, you can go back to the class I did on the 12-12 method, and that would help you a lot in being able to outline the patterns in the off session. Okay. Now, trends are very simple. As you guys know, most of you know how to draw a trend line. But are you drawing the trend line the right way? Okay. Most of you are just drawing the trend lines in a parallel way. And you may always observe in a lot of cases that the market doesn't touch it, right? So for example, this situation here looks like it's most likely starting a trend, right? So if I'm to look at this, and I'm going to try to draw a trend line in here, I would look something like this. And my next trend line would look somewhat like this. Okay, so I've been looking at the price within these trend lines to see how it's moving. And right now, it's looking like it wants to go to the downside. Okay, it's starting to look bearish. All right, so this is what looks more like an expanded pattern formation. And if this starts going bearish around 2 a.m. or so, between 2 a.m. and 8 a.m. or so, it starts to go bearish. We have potential target 1, and we have target 2, which will be on this trend line. And if it hits this trend line, we can potentially go back to the upside again, okay? Because that is the nature of price action. Price likes to create pattern formations. We need to make sure that we can identify these pattern formations to give us an idea of what price wants to do, okay? So in some cases, price may be creating some big pattern formations, and in other cases, it may be creating some smaller pattern formations. We just need to identify what these pattern formations are actually saying to us. Are they saying that we can expect bullish price action? Are they saying that we can expect bearish price action or neutral price action? What are these setups basically telling us? All right. So let's go back a little bit more. Well, before I go back, we can look at this inside of this trend to the upside. We can look at this and we can find, look at that. Look at this and this. So this is one of those contracting pattern formations. Like you can call this one a wedge. And you can see that this wedge formation is what basically triggered this aggressive move to the upside. Okay. Now, if you look at the next formation, which is happening in the off session, so the price is moving up. So this is the high point, and you connect it to the next swing high or swing low. And this is the low point here. This is a swing low, and you connect this one like this, right? And a lot of us may look at this pattern formation and we may call this some of us may look at it and say it looks like an expanded flat. Some of us may say it's an expanded flat. Some of us may say it's an expanded diagonal formation, though it doesn't have the wave count. But some of us may look at it in that type of way. Okay, so what we need to understand is if this is also a trend going sideways, it's trending sideways, we can expect that when price hits the bottom of the trend, we can look for that breakout. So every time price comes and hits the bottom of the trend, we could look for that breakout to the upside. Okay. In some cases, price formations could evolve. It's not a very common situation, but it can evolve in a lot of cases. Okay, so with you using the 12-12 method, it helps you to adjust your trends as you go along, because patterns do change their formation. Okay, the main idea is that you want to make sure that you track this pattern until the market open. When the market opens, you can start tracking the pattern. Okay, so generally we will start from around 12 p.m. Eastern Standard, and we go until around 12 a.m. Eastern Standard. Okay, we start drawing our lines on the close of the 1 a.m. candle. Okay, this way we have enough data to be able to, say whether this is going to be a triangle formation, a wedge formation, a ranging formation, flag, or whatever it is we would like to identify our corrections at in situations like that. We are basically looking in this situation here at what looks like a contracting wedge formation right here. And you can see that we get an explosion of price, right? You can see this is a contracting wedge formation. And you can see that we did get another explosion of price to the upside. Okay. So what happens in the off session is very important, and we need to understand how to identify these trends. Okay. The market is very structured. It is very structured. We just need to understand how to identify these structures in the market. So let's go back a little bit more. So in a case like this, right? In a case like this, look at how the price is moving down aggressively. Since the price is moving down aggressively here, if we identify that this was where the market opened, so this is our low, this is our high. So since the market closed higher than it opened, then we look at the high and we project that trend line, and we look for that low, which will be here, and we project that trend line. Okay, so what type of pattern does this look like? What type of trend should I say this looks like? Anyone? I see Vernon says, can you elaborate on the 12-12? Okay, so we do have a class on the 12-12. Oh, that was, your comment was about 15 minutes ago or so. Okay, no problem. I did touch on this already. So we do have a class on the 12-12 method. It should be available in the vault by now. But however, the 12-12 method is basically where we look at the market around 12 p.m. Eastern Standard. That is usually around the time when the market starts to die off, around 12 p.m. Eastern Standard. And we also have, we look at 4 p.m. Eastern Standard as well. So between anywhere, if we have a swing high around 12 p.m. Eastern Standard to around 4 p.m. Eastern Standard, we will look at that swing high as the point where we will focus our analysis on. So the first touch of our trend line has to start on the swing high of the day, the swing high of the day or the swing low of the day. Okay, and then you connect it to the next swing high or the next swing low. Okay. All right. So did I clear things up a little bit for you, Vernon? All right, Vernon says, yep. Wonderful, wonderful. All right, so in this case, you can see here, we were getting some sort of pattern formation. Who can tell me what type of pattern formation this looks like? What, or better yet, tell me what trend it looks like. I see Ken says it looks like a rectangle. Yes, it does look like a rectangle, but we do have names for them. In this case, this rectangle looking formation would be considered a flag formation. Okay, and in a lot of cases, this flag would be considered to be a bullish flag, meaning the price should be going to the upside. However, as you can see here, the price is going to the downside. And look at when the price is moving. It's moving at exactly 2 a.m. Eastern Standard. Okay, so the times, as I said, that I like to trade, if you look at sniper entries, which is another class that we did do, you should find that one in the vault for sure. That was, I believe, our first class. And if you're looking at sniper entries, you can see that we're looking at 2 a.m., 5 a.m., and 8 a.m. Those are the times that we're expected to see a big move in the market. Okay. So with this one moving to the downside from this point, we could look at this and say that we're in a downtrend because the market's moving down aggressively. Now, in a situation like that, where if we connect these swings, the trend will be extending outward like that. Let's try to do that. So the trend is actually extending outward like this. And look at how the price is basically respecting the trend. Look at that. See how it's respecting the trend? And this is one of the reasons why I expect that we could see price start to go to the downside as well. Okay. And if it's going to the downside, we could see it move to the downside aggressively as well. All right. So that's one that you can look out for. Now, this trend, this is our high, this is our low, and we extend this, connecting it to the next swing low. It could look like that. Okay. So this would be more of a major pattern formation, a very, very big pattern formation. And this is what we would expect it to look like. So it's moving down aggressively. It's pulling back, hits the top, pushes down, hits the low, because this is a trend of its own, right? So the price would come, hit the low, bounce back to the upside until it breaks out of that trend. All right, so we got to make sure that we are aware. When it breaks, if it breaks down out of that trend, we could see a nice aggressive move to the downside. Okay. Any questions so far? Anything you guys are not too clear on? Anyone? Any questions? Okay. No questions? All right. Okay. So let's try to make this a little bit bigger just to make sure you guys can see. Inside of this pattern formation to the downside, we also have other trends, right? So these are more like lower degree trends. This is where the market opened around here. This is the low of the day. So we start here, and if you extend this out like that, you can see that we have a lovely trend. And if we take the top, this is the low. So this would be the next swing high, and you connect it like this. And this would tell us, this is the 12-12, and this would give us an idea as to if we're going to get some sort of breakout, either to the upside or the downside around the market open. And we did kind of get a nice breakout to the upside. That is temporary. It broke out to the upside, hits the trend line, starts to push down, starts to reject. And then here you can see it made an aggressive move down, especially when it broke down of this trend line. It started moving down aggressively. Okay, so we need to make sure that we pay attention to these trend lines. And here you can see this trend line actually came from this pattern formation over here. So this is what that pattern formation would actually look like that. And if you extend it into the future, it looks more like this. Okay. So this, once price is above it, price is being propped up. When price breaks below it, price is being pushed down. Okay. All right, let's see here. Is there anything in particular on this chart that you guys would like us to focus on? Do you know of a day that gave you some trouble that you'd like us to go back to? If you guys can hear me, just give me a yes in the Q&A box. Sorry, the chat box. Just let me know that you're here with me. It looks like my internet may be giving a little bit of trouble. Okay, so I see the yeses are coming in. Wonderful, you guys can hear me. Great. So you guys don't have an area on this chart that you'd like me to look at specifically? All right, Grace says, with the 12-12 method, do you know when to continue in the channel or wait for the breakout? Okay. Let us see here. Let's make this a little bit smaller so we can, okay, let's use this. So I'm going to use this as a trend, right? Good, so that's our trend. This is our high, this is our low. So from the low, I'm going to connect it to the next swing lows. And as the price progress, I would have to adjust. Okay. So this is my trend. Inside of my trend, I have other trends, and I'm not always going to be able to identify these trends quickly. In some cases, this trend could look more like this, or like, yes, more like this. And then you got the breakdown. See, aggressive move. Could also look like this. Then you got the breakdown, started moving down aggressively. And then you got like this, right? So it's going to be adjusted as you go along, okay? But even inside of this bigger trend, this bigger pattern, we have smaller formations. So for example, if the market opened here, right, this would be the high of the day. And if that's the high of the day, then we can use the 12-12 method. So this would be around 12 o'clock, the swing around 12 to the swing around 12 a.m. Okay, so this is the swing here and right here. Good. So this is basically our pattern formation. It does appear to be looks like a contracting pattern formation. So in a case like this, if this is a contracting pattern formation, we would be expecting some sort of aggressive move to the downside or some sort of aggressive move to the upside, okay? So in this case, we can see that it broke down and it broke down very aggressively, all right? So with it moving to the downside, if you were able to catch the breakout or catch the rejection of the upper trend line, then you'll be able to enter into a very, very good trade. Okay. All right, I see some questions here. All right, Vernon says, if you are a swing trader, will you use 4-hour time frame? Yes, if I'm a swing trader, yes, I would use the 4-hour time frame. All right, so this would be what the 4-hour time frame looks like. Let me just good. So this is what the 4-hour time frame would look like. Okay. You have smaller candles, you have less candles, and you also need to be careful if you're going to be swing trading. You need to understand the trend. You need to be able to at least, I would say, use either support and resistance in the right way, or you use the Elliott wave theory. Okay. I see we can also use market geometry to help you with your setting profit targets, setting stops. So we have classes that have been done on these topics already. They should be available in your vault as well. So all you need to do is just go to your vault and go through these other classes. They will be very beneficial. Okay, so I was saying that if we had a trend, I think I moved from it. I think it was around here. So this is the 4-hour time frame. And if we're going to swing trade this, we're basically going to use the same rules. So this is basically what we look at. We can't use the 12-12 method here on a 4-hour time frame. It has to be on a 1-hour time frame. So basically, this is our swing high, this is our swing low. And we project that into the future like that. And here you can see we have another pattern formation. Very well. So if you are a swing trader, it would be good if you could identify these types of patterns reasonably early. Okay, so if you're able to identify them early, then you could decide when you're going to take a swing trade. Like one of the best opportunities that I can look at here was in this area. So around here, you can see it's approaching the trend line. This would be a lovely area to look to go short and hold it for a bit. Okay, whether you want to hold it for a day or two, this would have been a great opportunity. Okay. I see, let's see here. I see Grace says, okay, thank you. I see Ken says, not an Elliott wave lesson, but that last pattern looks like a corrective C wave starting. The last pattern, when you say the last pattern, what do you mean? Oh, I'm thinking this one. This is what you're talking about. Okay, so I'm thinking this is the one you're talking about. Yes, so you're looking at this as A, this is B, and this is C. And that is also correct. You see, the B waves normally look like these, right? Expanded pattern formations. In some cases, you could find contracting pattern formations. I'm looking at patterns mainly on an expanded point of view or a contracting point of view. I'm not excited with expanded pattern formations, though I'm looking at getting involved with them around their trend lines, but I'm generally not excited with expanded pattern formations because they could extend. And when I say extend, I mean they can continue going on and on, expanding, and you don't really get that breakout, right? So in this case, eventually we got the breakout. And as you can see, the price continued moving to the upside for a little bit, and then it went right back to the downside. And the reason for that is most likely, as you can see here, we are in a down trend on the higher time frames. Okay, so this indeed should be expected. Okay. All right, let's make this smaller. Sorry, bigger. Okay. So inside of this expanded formation, if you look deep inside of it, drop down to your 1 hour time frame, you would be able to analyze what's going on inside of it. Where are we? Okay, so this is the one that we're using. All right, so there we are. And as you can see, prices coming down. This is the low of the day. So if that is the low of the day, let's see here. If this is the low of the day, that would mean that this is the next high. And this is how we would draw our 12-12 formation, like this. Okay. And as you can see, it is expanding, letting you know that the price could come back to this high before it goes down. And in this case, it actually broke out of the high, then went to the downside. Okay. So if I'm looking to get involved with a pattern formation like this, I'm looking to sell because I have an impulse wave above, right? So I'm looking to sell, expecting a continuation. So in a case like this, when the price comes and hits the top, this trend line over here, I'd be getting ready to go short, or I would go short once the price hits this area. Okay, here you can see the price eventually came back to the downside. Okay. And when you're a swing trader, you need to be very careful with your stops as well. You can't just jump into a trade, place your stop. Sometimes it may pull back against you, and maybe eventually within maybe a few hours or a day or whatnot, it goes in your favor. Okay, and when the price makes, let's say, let's look for an example here. Let's say this one. If the price if you're going short somewhere around here and the price goes down, you should only trail your stop if the price makes a correction and then breaks down of that correction. Then you can move your stop from here to maybe break even or whatnot. Okay, but you need to make sure that you, as a swing trader, you don't just come in and walk with a ton of stops. You need to make sure that you're in profit and you get a correction and that you get a breakout before you decide that you're gonna put your stop on or bring your stop to break even or bring your stop into a small profit. Okay. All right. Any other questions, guys? Anything else you'd like to ask? Anything else you're not too clear on? I'll give you guys a few seconds to submit your comments. All right. Okay. Well, this will bring us to the end of this evening's class. Thank you so much for coming. It's been a pleasure having you. Please practice makes perfect. Practice your trend lines. Practice your 12-12 method. I know the 12-12 method may be a bit new for many traders. Just do a little bit of practice because practice makes perfect. And once you get the hang of it, you're going to understand which type of patterns you should trade, what type of patterns you should not trade. Okay. My preference are squeeze patterns, or should I say contracting patterns. Those pack an explosive punch. Okay, we may find the rare scenario every now and again where it doesn't explode with volatility, but in a lot of cases, those squeeze pattern formations or contracting pattern formations do give you a lovely explosion of price action. Okay. All right, guys. Thank you so much for coming. Have yourselves a wonderful evening. Bye bye for now. Bye.